I think we're talking Australia in this section.
Yeah, we are, Bernie. And of course, the two-day event kicking off the Asian Financial Forum at the Hong Kong Convention Center. At 9 a.m. earlier this morning, we heard from Chief Executive C.Y. Leung delivering the opening address, welcoming all the delegates to this conference. And just recapping a little bit of that, he reiterated the importance of Hong Kong as a renminbi trading hub and that there was room to diversify financial services offering that Hong Kong has to give. Hong Kong, he aims to maintain to be the gateway to and from the mainland, as well as to strengthen Hong Kong as an offshore renminbi hub, and also looking to increase the product offering. So enough about that. We are, of course, going to be also hearing from John Tsang, the financial secretary. He'll be here for the cocktail later this evening. But joining us now is Josh Frydenberg. He is the Assistant Treasurer from Australia, joining us now. And of course, he's going to be speaking in a plenary session later this morning. But I want to start by asking you, just this morning, we're seeing some very steep falls in the Shanghai markets. The Chinese economy is, of course, very, very much of focus. I want to ask, a slowing China, how does that impact Australia?
Well, China is Australia's #1 trading partner. We have two-way trade of about $150 billion, and it's been growing from year to year. And we've just announced that the Bank of China will be a clearing bank in Sydney. We welcome China's integration into the global financial system. We're seeing, for example, the free trade zones in Shanghai and elsewhere, which are opening up opportunities for Australia. And we've just signed a free trade agreement, which is very, very lucrative for Australia as well, between when Xi Jinping visited Australia for the G20 meeting. So we continue to do good business with China, but we want to see it continue its growth. Looks like its economic growth for this year coming will be just under 7%, which will be the first time since 1990. So we hope the Chinese economy does continue to grow.
Specifically, what types of risks does that pose for your country?
Well, clearly we rely heavily on our resources exports. Resources are nearly 60% of Australian exports, and as you know, the iron ore price has come down nearly 50% over the last year. Same with the oil price, as well as with coal around about 30% and wheat down about 20%. So these are all important export commodities for Australia. So that does hurt us, and we just wrote down for the forward estimates over the next 4 years about $32 billion worth of revenue, which we were expecting as a result of company tax receipts and other receipts that would come from stronger resources prices, which look like no longer being there.
All right, Matt, come on in here.
Thanks, Emily. Hi, Josh. It's Matt Taylor down here in Sydney. I just want to pick up on what you were mentioning there with respect to the big pullback that we've seen in the commodity space and the likely impact that that will have on Australia's budgetary position, because you revealed an increase in the deficit out to about $40.4 billion in the MyEFO statement, but the big drop that we've seen in oil and copper, just to name two of them, happened after that release. So can we expect a further deterioration in the Australian budgetary position going forward?
Well, Matt, 2 points to make. First is that we have the next budget coming out in May, and we will revise the numbers in accordance with current market conditions, and that will be the next time that we do that. But the other point is the lower oil price. It does hurt our exports because, as you know, Australia looks like being the largest gas exporter in the world by 2018. But at the same time, it's lower petrol prices for consumers, and that can help fuel economic growth domestically. And it's the lowest petrol price at the Bowser in Australia for 4 years, and that's not insignificant in reducing the cost of living expenses for Australians. So there is a twin-edged sword to the lower oil price, but certainly we are concerned about the falling terms of trade. As you referred to, Matt, in MyEFO, we have written down our terms of trade by the biggest single drop since 1959, and so we're very cognizant of those international developments.
When you look at tax revenue here in Australia, there's been a big debate about the need for further tax reform. We know that the Abbott government has potentially flagged some changes to the GST, not so much in this term, but potentially if you win a second term in government. Do you think we need to accelerate that conversation then, given the volatility surrounding tax revenue, particularly when you look at the commodity space?
Well, we don't have any plans to increase the GST either in the rate or the base, but we are doing a comprehensive tax white paper, and Australia does have a heavy reliance on corporate tax receipts, about the second highest in the OECD as a proportion of overall receipts, and we have very high reliance on income tax receipts. And we have to look at the overall tax mix, the indirect taxes and the direct taxes, and we have to ensure that as a net capital importer, Australia is an attractive place to invest with very competitive corporate tax rates. So we will look at all these issues in the context of the upcoming tax white paper. We'll invite proper discussion and consultation, and we certainly won't be pulling out any surprises.
Treasurer Frydenberg, it's Bernie Lowe, Emily's partner here in the Hong Kong CNBC studio. I just wanted to weigh in very briefly here. The news flow has been quite a little bit negative for Prime Minister Tony Abbott on the spending side initiatives which he's been trying to enact, like changes to the national health care system, tweaking copay and that sort of thing. Would you say that, with the current environment, that any attempts to rein in on the expenditure side are probably blown through for the time being? And what impact does that have on the on the nation's balance sheet?
Well, we do have a structural deficit in Australia, namely that we are spending more than we are taking in terms of receipts, and we do need to narrow that gap. And while Australia's debt to GDP ratios are below that of a number of other comparable countries around the world, we are pretty vulnerable to the terms of trade. And one of the reasons we were able to come through the last global financial crisis so well was because we had money in the bank. At the end of John Howard and Peter Costello's term, they left a debt position of zero. There was zero government debt, pretty unique around the world. But we have seen debt increase over recent years, and we were bequeathed by our political opponents a trajectory of $667 billion worth of debt. As a result of fiscal consolidation, as a result of spending announcements that we've made, we will bring down spending by about $170 billion over the next decade, other than what it would have been. But we are also determined to get through further changes through the Senate, and we are dealing with the crossbenchers in the Senate. We don't have a majority in the upper house. We're dealing with it on an issue-by-issue basis. But one important point to understand about the Australian budget is that 86% of the government's expenditure is namely administered grants, which are extremely tightly tied to eligibility requirements that often involve legislative change around welfare, around education, around health. And that is not an easy prospect to get those changes through the upper house. So we're very pragmatic. We will discuss those issues with the crossbenchers. We'll negotiate on a case-by-case basis, but we're confident we're on the right track, Bernie.
Okay. Yeah, I know it's very tough in a political environment to fulfill your campaign manifestos, but Mr. Abbott is learning the hard way, and you're doing a lot of the hard work. Thanks, Josh. Appreciate it. And Emily as well. Em, thank you. Great coverage. Really added a lot to the show.